Hey guys, Mike here. Today we get to answer all your questions and comments, and you definitely have some good ones this week, so I'm going to try to get to all of them. I apologize if I don't get to all of them because there were quite a few, but I'll try to do the best I can. I like to keep the videos a certain length and stuff, so feel free to participate and everything, and as usual, let's get right into it and don't waste any time. Now, first question comes from one of our members, and he says, what is going on with Apple, Boeing, and Tesla? And there's quite a few things going on with Tesla, and we'll just start with the first one, right? One is the price war they're in, especially with BYD and stuff. And this was Q3, for example. Let me show you what I'm talking about. You see revenue right here, how it says, year over year, you're looking at plus 9%, and then look at the auto year over year, plus 5%. But then when we move on, you can see Q4 ends up coming down, revenue total plus 3%, and auto was flat. And you can really kind of see what's happening since they started this war right here when it says Tesla sales slow down. Well, yeah, how about that? You just see them slowing down. It's obvious to see that. We know it is, and even Elon's kind of talked about what's going on, especially if BYD starts to, and I think they have started to expand their operations. They're a legitimate company, fierce competitor. He's said that himself. And they got a lot of competition going on. And China, of course, is a hot mess because of their economy and stuff, and they have a lot of exposure to that, right? Well, it's even crazier when it comes to them saying, well, it's a car company and all this other stuff, and that's why it's suffering right now. Well, that's funny because GM and Ford are up during the same time frame. Tesla sold off over 30%, GM's up, 19%, and Ford's up 10%. And then you look at BYD, it's been selling down too, not as much. And so this really is an EV thing. I mean, all the EV makers have been selling down like crazy. And so, again, Tesla's the front runner on this because a lot of stuff, and some of it, people say, hey, it has to do with Elon, which we'll talk about in a minute, and it could be, right? Boeing is all about news, which we'll get into in a second. But again, this one's coming into a support level. I think that was news right there. Wasn't it that huge drop right there? And so, but when you look at the news on this one, I'm going to go through real quick a bunch of them just over the last week, right? Fitch cuts Boeing's rating outlook to stable, sees lower MAX deliveries. Boeing tells airlines to check 787 cockpit seats. Remember, the door flew off a few weeks ago, and now they got another incident. United Airlines is looking for more Airbus jets, not Boeing, so that's a hit to them. And then you come over here and see European regulators could suspend Boeing's approval if warranted. So over in Europe now, Boeing shares fall amid aircraft safety production concerns. And then, of course, some whistleblower, I think, that testified against them. He ended up passing away the other day. That's interesting. So, they got a whole lot of stuff going on, news related, and the fact that their jets don't seem to be, or warranted to be safe, and they're having a lot of incidences, right? So, and of course, they have a lot of jets out there. But so that's what's going on with Boeing. Apple, simply the chart, right? We talked about that level forever breaking. It broke. 166, 168. It's a good level where people, started to buy up. But we'll see if it comes back down and testing, 166, but it's below all the moving averages and everything. And the one thing it hadn't had is an AI pump, right? And this thing is bought, Apple's bought over 43 AI companies, more than any other company out there that I can think of, actually, including NVIDIA. So, again, it's been selling off since everything else has been pumping, which is not good. And again, it has a lot of exposure to China. That's one reason. Again, it hadn't had its AI pump. So we'll see if this continues to show weakness now. And guys, before we continue, if you could hit that like button for me, I sure would appreciate it. It helps people find this video and everything. And also, if you like the content, think about subscribing, guys. Next one, Anthony says, this government hates Elon Musk because of his political views. It's obvious this is an attack on him. Explain how crap stocks worth nothing have huge debt issues going up. There's bad news on Tesla all the time. Keep bringing more bad news. Wall Street so-called analysts will be buying. And of course, that's the other thing with Tesla. They've had price downgrades, some big price downgrades. And, is this a hate on for Elon Musk? I don't know. Honestly, I have no idea if they care about his politics. As I showed you, every EV company's going. Tesla just happens to be going down the worst. But remember, the one thing, if you look back on all the big runs for Tesla, it was just a whole bunch of exuberance from the call sweeps coming piling in. This is all the traders and everybody rolling in those call sweeps, forcing the market makers to hedge, moving it up like crazy. And you just haven't seen that, right, for quite a while now. And a lot of love is going to NVIDIA and AMD and other AI stocks and Microsoft, which is super strong, and all these different areas, okay? And EVs right now just aren't the hot thing. They're having problems. They're having a price war, which is not something you want to get in the middle of, right? But, Tesla doesn't trade off price wars. It does trade off the chart, and the chart just looks really rough. Doesn't mean it ain't gonna get its bounces. You know, it is Tesla, and people still like to trade it up when it gets oversold and all that good stuff. But again, I think a lot of people are eyeballing. Anyway, I've seen, you know, 160, 152, 144 levels. And again, I don't know. Put in the comments if you think it's because his politics and all this other stuff. I don't know, right? And we'll see. But I'm gonna hold back half of what I want to say honestly about Elon Musk. I think y'all know what I've said in the past, and if you hadn't, oh well. But you know how I feel about it. So anyway. Next one here says, why is China / HSI, which is their index, going up? And I've talked about this before. I think I did a members video the other day on this. One is it's just been crushed, first of all. Second of all, you know, it's hitting levels I hadn't seen in years, honestly. And third of all, you know, when you look at this thing, everything gets a bounce, right? It's just the way it is. I mean, you look over here, look at that. I mean, since the great financial crisis crash, even before that, so you're talking about like 06, 08-ish, somewhere in there at these levels is at now. And so you're starting to see a little momentum come into it, but you know, you can see the MACD on the dailies moved over. And the real reason is too is a lot of these stocks that are on this index are hitting, like I said, like the lows and double bottoms at levels they hadn't seen in years. And so of course it's bouncing. The other thing is, look at the divergence between QQQ, right, which is our tech industry, and this index. Used to, they traveled together. Okay, and once as we scroll through this, you can see 2020, 2021, you see a huge divergence started, right? QQQ ran like crazy, HSI sold off like crazy, and then here comes 2023, and HSI continues to sell off, right? And so eventually, money says, okay, these are all-time highs over here. This one's in the dumps. Maybe we start putting some money there. And so that's why you see money start to roll in there. Does that mean it's going to continue? We'll have to see. If it breaks that trend line, which you see coming down and comes up, that's how it trades throughout all the years or moves, then yeah, you can see even much bigger move. But it just has to do with quant funds and everything else saying, well, you know, when you look at their company's PE ratios and all the metrics and stuff, you kind of go, well, maybe China will get that together and they'll just roll in there and try to run these stocks up. That's what they'll do. And so we'll see if it happens or not. Let me know what you're doing. I always said I would never own Chinese stocks, but I'll trade the heck out of them. You know, no problem with that. The next one here says, is the market rotation happening of small caps? IWM has not reached its level of 2021. You know, is rotation happening? Yeah, rotation has been happening. I mean, you can look on the chart and see it's going up, right? So rotation moved into it. But again, this one is very sensitive to rate cuts. So every time you see what? Oh, there's not going to be any more rate cuts in March or May or maybe even June now, all of a sudden they start trying to reprice this thing down. But you can see money rotate into this because everything else is hitting all-time highs. This one right here is still, today as I'm recording this, 22% off its all-time highs. All right, so still way down there. But remember, 1/3 of the companies don't make any money. A lot of these, what it is you're seeing is they're getting short squeezed, they're low float stocks, maybe they're reporting good earnings, stuff like that. That's nothing that's happening is a lot of these are reported earnings, big run-ups. Now they're kind of consolidating sideways, right? SMCI is kind of doing that, and it's going to be leaving to go over the S&P. I don't know when it's coming off the Russell. And so sure, again, it's like HSI. Money's going to rotate where there's bigger opportunity and bigger gains to be had a lot of times. So that's what's happening. So hope that helps you out in that one. Let me know if you got any questions on that. Next one says, hey Mike, could you do some technical analysis on Chegg or TMF? Seems like it'd be a pretty good buy right now. Is there any advice you could give? And if you look, I'm going to do TMF here. I'm not going to do Chegg, but TMF is the Bulls 3X directional ETF of the TLT. Okay, and so you can see about this trend right here. It's been rejected multiple times, still in this huge downtrend right here, even after that big pop it had in October. And instead of really trying to chart a 3X levered ETF, you're just kind of better off going over to TLT, which is what we're going to do here. And we go over to TLT. You can see this one right here is in a clear down channel at the moment, looking at the daily right here. So it had that big pop up. Now it's coming down right here off that channel and stuff. And so, again, down like what? Maybe 8%. This ain't a fast flyer or a big mover like tech stocks, right? But it's very important to understand something when it comes to TLT, okay? And I just did a members video on this. We're going to pull up the Fed funds right here, okay? When you look at this, there are 3 phases to look for when it comes to TLT, when it comes to the move up or the move down, right? First, you're going to have your pause rally, all right? There we're pausing. That's the Fed funds rate right there. Boom. You end up having this rally up. Woohoo! They pause. Yay! Which means hopefully rates won't go any higher. Remember, there's an inverse relationship between TLT and the rates. The rates go down, TLT goes up. The rates go up, TLT goes down, all right? Then there's the cut the rates rally, right? They cut the rates, boom. Then the third part is the recession when they cut the rates to 0, right? And you can see this in 2020. You can see it in 08 right here, the same thing. So there's 3 phases. So if you're, like I said, the members, if you're long TLT and you're betting big on it, you want there to be a recession because you want the Fed funds to go to 0, right? Because that'll really make TLT pop. So, that's where it's at right there. Again, you can do the TMF. That's the 3x leverage ETF as well. Just be careful with leveraged ETFs. So hopefully that helps you out on that one. Next one says the seasonality is actually sell in May. March is not usually that bad. Now that I've said that, look for the meltdown to start tomorrow. And if you're wondering about sell in May and go away, it actually came from the Stock Traders Almanac, which I subscribe to. And what it is, it calls for the best 6 months of the year. So historical data reveals that the top performing 6-month rolling period on average has been November through April, right? Now, you know what I like to do? I like to go, I don't give a crap what happened pre-2000, to be honest with you. Especially I don't care what happened in the 50s and 60s and 70s, really. What I like to do is go back, let's say the last 10 or 15 years or whatever, and just look at it. And when I take you through this, make sure you count the red and the green, right? So you can see 2010, red, right? 2011, red. So far, it's like, yeah, and this is May through August, okay? So this kind of gets us right at the beginning of the summer and through the summer, right? And then we go through 2012. Well, it's green. Okay, cool. It's up slightly, but you see very volatile, right? 2013, up about 10%. I'm doing the Qs here because that's the most volatile one we look at. And a lot of people just love tech and stuff, right? 2014, look at that. We're green, up 15%. So you definitely would not have been out of the market then, right? 2015, you can see it's basically red, about 5% right there. Very volatile as well. 2016, another green one, up about 10% during that time range. 2017, up about 7% during that time range, right? I mean, if it's up that much, I mean, stocks are up way more than this. And then you got 2018, up about 15%. Definitely didn't want to be out of the market at this point in time. Then you got 2019, roughly flat, to be honest with you. You see the volatility there too. 2020 we're not going to do because that's when we shut down the world. They pumped trillions of dollars in, so everything went up. That don't really matter. 2021, again, not a time to be out of the market. As you can see right here, up around 14% during that same time range right there. 2022, we're in a crash. And even though we were in a crash, still only down 6%, but look at the volatility. I mean, huge swings right there. And then you got 2023, you definitely did not want to be out of the market. 19% from May through August. So when you look, I count 8 and 5. 8 green, 5 red. And the greens were way higher than the reds, right? 18, 16, 15, And so that's what I'm saying. It's a tough one to say, hey, sell a man, go away. It's like, I think it depends on what's going on, right? And so maybe if there's a huge run up into it, maybe that's what happens. But it's a tough one. I know definitely, as we talked about last year, the fourth quarter is by far the best time to be in the market for sure. And I told you why, the videos on everything else. And so again, looking at that, sure, you can go back 1920s, you want to, 30s, 40s, but let's be real. Before, I don't know, 2010, we see what the option market has done to the market, right? I've showed you plain day, the data shows you that, right? And I don't remember them having a ton of margin back in the 30s and 40s, not like they do today. Didn't have as much retail investors coming into the market like they do. I mean, all kinds of stuff. There's just so many things that's different about 2000 to now versus before that. So I tend to like just to go, and plus the Fed didn't own the market, which is why I usually go after 2010 just to look and say, what do we got here, right? And so again, you can beat out if you want to, you can be in if you want to, but I think you just kind of understand from May to August, probably going to be volatile, but you'll get your crazy run-ups as well. And so, again, I hope that helps you in everything. And really, February, March are volatile and usually do get a sell-off at the beginning of the year, especially when it's a presidential election and stuff like that. But we just ain't really got it because there's such a raging AI pump with semiconductors and stuff like that. That's why. And then whenever there's a fear about rate cuts not happening, they just roll back into Microsoft and Apple and Google and all the cash cows, right? And so those have such a high weight. Again, hard to push down the market. That's another thing since 2010 forward is the weightings in these indexes is insane, right? And so with these stocks we got. So anyway, hope that helps. Let me know what you think about that in the comments and stuff. Appreciate all the questions, guys. Feel free to put more in there. And I try to pick them up as the week goes on to prepare and stuff for Saturday. And I'll end up seeing you guys tomorrow. Please hit that like and subscribe button on your way out. And I hope you have a great rest of your weekend. See you later.